Hello, welcome to the workshop number 4 of Business Financials. My name is Andrius. I'm representing my own company that I had for the last 13 years. And before that, I also had worked with different startups of my own that some were successful and most of them just died out. So I will try to present the financial part of startups or small companies, or just an idea that you want to commercialize from very practical, maybe even at some point very simple way. I will not speak about very huge financial valuation of the companies and different models, but I will grasp a little bit of that as well. Basically, when you are speaking about finances and startup and any company in general, there has to be three main points: sales, cost, and then profit or loss, preferably profit. If you are doing something and it doesn't have sales, cost, profit, or loss, it means it's not business. It's something else you're doing, or you're doing, but you don't understand that how to describe sales, cost, profit, and loss. If you have no expectation of profit in your business idea or in your activity in general, it's not business. It's a hobby. Hobby is very nice activity. Everybody, in my opinion, should have a hobby. And you spend money when you're doing hobby. Some hobbies are very expensive. Some require very little money. But if there is no sale, or if you are selling for less than what you are investing, and you have no idea how to improve and make profit, it's not business. And if you believe that you're doing business but you don't know how to make profit, stop it. It will, unless you know how to finance in the long term, you have unlimited finance or enough finance, and you want to keep going, it makes you happy, that's okay, but it's not business, it's a hobby. So I will speak in my workshop, in my seminar, about how to make business and how to make money, and more importantly, how to know that you are making money and how to calculate that. What are sales? Based on my experience speaking with students and with small businesses, and especially people who are starting business, there are quite confusion with some of them, not all, that sometimes sales, according to them, are equal to investments, loans, prepayments, profits. So it means if they see money, they already believe that it's already a sale. So sales are not investments or loans or prepayments or profit. In rare cases, that can be a case, but majority it's not. So try not to confuse. Sales also can be called revenue, earnings, proceeds, are basically a price multiplied by quantity. So whatever you are doing in business, you have to make a sale, and somebody has to give you money. And in order to make a sale, you must have a product that has a value. Value is determined by price and quantity. So if you multiply a price by quantity, you have a sale, you have a revenue. In physical goods, also in digital goods, if it's some app that you are selling, you have a quantity, you have a price per unit, and then of course per time unit, so per month, per year, or quarterly. So services, usually it's a price per time unit, per contract that you're selling. And in IT-related services, there are a lot of different variants, but mostly it's subscription-based, license, one-time sale, and some others. But you have to understand that in order to make a business, you have to make a sale, and sale is something that you are can evaluate by price, by quantity, and it has to be defined very well. So for you to imagine, when you are actually making a sale, you have to issue an invoice. In invoice, there is a description of goods or services, then there is a price and quantity, and then total price, VAT, taxes, and some other notes. But when you're trying to make your business idea into reality, try to imagine that at some point in the future, you will be issuing invoices to your customers and how that invoice will look like. So if you cannot define your service or good in one sentence that you can put in an invoice, something is wrong, you have to go back and rethink your idea. Price. So price is a representation of your value proposition to the customer, but value proposition, it's another workshop and another topic in general. But basically, when supply meets demand, it's a theoretical part. In practices that whatever your customer is paying you, it's a market price. It's the market price you defined. So I like this quote very much, that good price is when your customer has money, gives you money, and complains about it, and comes back again. So it means you reached that market price. So of course, if it's too high, then customer has money, complains about it, and don't give you money. So then the price is too high. Yeah, I like this triangle very much, and it helped me a lot in my own experience over the years. And you can have only two. Some companies are trying to be very fast with delivering product or service, very good quality, and be very cheap. And in my experience, it never works unless you have monopoly or some unlimited resources. But in normal capital economy, you can only choose two. Sometimes combination can be, you can be in the middle, but again, in my experience, if you're stuck in the middle, it's very confusing for the customer. Are you very fast at delivering product or service, or do you have really good product, or why is your price lower? So whatever you do, my suggestion is choose two parameters. Either quality, you're doing very quality product service, and you're providing it very fast with very good customer service, and you're charging extra for it, so your price is high. Or you're doing very fast, bad quality, and at very low price, and other combination. Later on, I will show you one product that I developed and provided to the market, and it's a big product mainly for export markets, not mainly, but entirely. And I started my company when Lithuania had litas as a currency, and my invoices consisted of two currencies. So one currency was in litas because it's a requirement according to national accounting laws that invoices has to have national currency. And for the customers, because all the customers were outside Lithuania, even some are outside European Union, the price was in euros. Then, as you remember, some years ago, litas was changed to euros, and I had to change my invoice accordingly. And it happened so that I don't remember the exact circumstances of my mistake that turned out to be very profitable for myself, that I changed my invoice, I deleted one line, but I switched litas to euros. So it means that, for example, if a price of my product was 350 euros per unit, I deleted the litas, and I wanted to leave euros, and instead I left digit to the litas, but euro sign instead of liters, so it means that I did not divide by 3.445 exchange rate at that time of liters to euros, and I sent to my customer instead of 100 euros, 340 euros. So 3.45 times higher price per product. And customer said, yeah, fine, of course, yeah, I see that your price increased, but we need this product, so just, yeah, make it and deliver as fast as possible. So at that time, I realized that I was doing good quality at very good speed, customer service, and low price. So it was good for my customers, but bad for my business. So since then, I understood that don't be cheap. Especially when I spoke and had some courses for students, they always talk about price. Yes, I can make it, but it will be too expensive, and maybe we can make it cheaper. So what is cheap for you or expensive for you, not necessarily is expensive to your customer or to your end user. So don't be cheap. If you're doing something very well and you're doing a great job delivering fast, you can charge a high price for certain customers. Especially if you are looking at a global market, and by global I mean whole continents. So you can increase, you will always find some customers. It will be a very niche market, but if you can get one customer in Brazil, another one in New Zealand that pays you 3.4 times more than you can get locally, so go with those clients. And don't be cheap. In order to determine price, there are two main ways. One is value-based pricing, another is cost-based pricing. Especially if you are a startup, and most startups are based on some sort of technology innovation, so that is not defined and does not have direct competitors. There's always competitors, but not always you have direct competitors. So it's very hard for customer to understand the value, and therefore corresponding price. So it means that there are many ways to determine how much customer is willing to pay and ask for this price. A very brute example, and if you are in a desert and you have one bottle of water that you bought for €1, and somebody has 1 million and wants this bottle of water, they can pay you even $1 million for that bottle of water, because it's a unique product in a unique place, and you have a monopoly in that supply, and you have a user that has money, so otherwise he or she would die, so they can pay you $1 million. So it's a value-based pricing. If it's a cost-based pricing, so it means you bought a bottle for €1, your travel to this desert cost €100, and you want to make a 10% profit. So it means that your cost is €101 plus 10% profit, and you're selling for something like 11 euros. So it's a cost-based pricing. In certain scenarios, when there's many competitors and you're competing with others, value-based pricing is not always possible. But if it's a unique product for a startup, that market is not defined, the product is not defined yet, or the customer is not understanding your product but wants it, so I suggest go with value-based pricing. How to define a price based on value, it's a very long topic, but in short, you just have to try to sell it at different prices to different customers and see which group buys the most. Also, with value-based pricing, you have to make a lot of explanation to your customer in order to justify this high price. Yeah, cost can be costs are consist of two main ones, of fixed and variable. Basically, the cost is what you spend to get something. And in company, it means that you have to buy raw materials and services in order to create something. If you're creating a physical product, most of your cost will consist of physical goods that you will have to buy, transport, transform, rent a facility, store it, ship it, provide a customer service, and so on. So it's mostly variable cost that you will be dealing with. Fixed cost, it means that you still incur those costs, you still have it, even though you are not producing and not selling. So it means that, let's say, you're producing physical goods, bread, and you have enough in stock, and this week you are not producing more, so you still have to pay rent, you still have to pay taxes, you still have to pay salaries to your workers, and even though you are not producing anything. And this fixed cost mostly kills businesses. So if you are not careful about management of your fixed cost, it's very likely that it will be the reason your company will go down. You will go bankrupt or will get losses this year or that time period and so on. Variable costs are important if you want to be profitable and have great valuation of your company in the long term. And variable cost is mostly related to sales, sales of your product and production and sales of your product. So if you're not producing bread, you are not buying any raw materials, so you don't have any variable cost. Yeah, so this is an actual example of one of my products that I am producing for one foreign company. So it's a special aluminum part used in the shipping industry. And this is an actual cost of, at some point in time, that I'm calculated and I'm tracking my cash flow. So it means that materials are aluminum stock of certain grade. So in this case, the D25 to D70 are different products, different markings for products of different size parts. And manufacturing, I'm outsourcing. I'm not doing anything anymore myself. So then I have more free time. When you have stock, you deliver the stock to the manufacturing facility. The manufacturing facility transforms that stock into a finished product. The finished product already has a shape of the final part, is transported to a company that is making black anodes. So by black anode, if you're not familiar with chemistry, basically you're dipping aluminum into some solvent, not solvent, but into a material, sulfur, and you put electricity through and it hardens the surface of the part. Then some parts, and those particular have to be polished just to make them look nicer in order to avoid matte finish. Then I'm paying for packaging. In this case, packaging includes the actual packaging and the service to put the part into a package. And also every part has to have a logo of the final user. And it again has a cost of, in this case, of D25, 15 cents. So total variable cost are 2.23 euros. And then final cost to keep track of a cash flow is 2.69. So whatever you do, try to list all the materials, all the ingredients, all the services that you're buying into a very simple Excel sheet. Then you can predict and you can track your expenses. This is only about variable cost. Fixed cost, I have different sheets that I'm tracking employees and rent and some others, the ones I have. This is another product that I had a factory 12 years ago. I started, it's a carpet made from used rubber truck tires. And the usage of such product is for construction industry. And Lithuanian market is not using it, or at least I don't know. And it's mostly used in countries where they have a hard surface as a rock or some solid surface and they need to blast it. So it means they need to excavate, but excavating granite is very difficult. So they drill holes, they put explosives, detonators, and the entire surface are covered with such mats. So when the detonation occurs, the blast occurs, they lift the mat, but all the debris, all the crushed rock are contained underneath this carpet. So it's a specialized product. I'm not the one that invented it. So it used to be produced in Scandinavia for many years. I'm just adapted the design, the shape, and for one specific market. And yeah, I based my product, I priced my product based on value-based pricing because I calculated and I presented and my customer believed me that it was paying me more because they are saving time on the construction site. Again, getting back to materials, so this was the actual material list and cost of my product at that time. So again, I calculated all the components that were going into this carpet. And at the very end, what I want to emphasize is CFR. I'm not sure if it's an actual term, but this is the one I was using. It's cash flow requirement per mat, per unit. And then below is the cost of mat. And they are different. So in business is that when you're calculating the cost, you're calculating without taxes. So without value-added taxes. But when you are actually spending money, you have to spend this VAT. And in my experience, some companies were getting in trouble at the very beginning of their operations when, for accounting purposes, you're not using VAT never, ever. You're using only the cost of actual production. But for material purchasing, you are spending and you are getting invoices with the VAT. So be very careful when you're calculating your cost to include everything that you actually spend. Because if you're speaking with your accountant, they are using different methodology and accounting. I will speak about accounting a bit more. Yeah, fixed costs. Be very about your fixed costs, such as taxes and office rent and similar ones. So for social security taxes, in Lithuania at least, you have to pay until 13 days in a month. If you are late, you will get a reminder. If you are late again, they will just block your accounts, or they will freeze the remaining amount if there is any money. So, and they don't care if you're doing some product or service that will save the world, that will end wars, and that you are very good and you will cure all the diseases. Tax people, they don't care. So if the time comes, you have to pay taxes, and it's your fixed cost. If you have employees, there's social security tax, there's income tax, and they have to be paid every month. Income tax can be deferred in certain cases, but social security tax are very strict, and they're collected on very strict basis. So office rent, again, I know some office centers, especially in foreign countries, if you are renting and you're not paying on time, they just block the entrance. So if you have an office, or even if you have some manufacturing activities and you don't pay on time, you just cannot continue your business. So basically you're going bankrupt. Then of course you can have to loan money from somewhere and then negotiate, but your business is stopped immediately. Again, accounting is not a finance. Accounting is how to calculate correctly the taxes you have to pay, and financing is about how to managing cash flow and how to pay taxes later, or how to see and defer tax payment as much as possible and optimize your taxes. Because when I'm speaking with my accountant, she's following strict laws and she's always on the safe side. Financing is to find more freedom and to do what's best for your company to make profits. Again, in finance, you have a lot more variables than you are seeing in your accounting books. For example, if I want to buy something from my supplier, I usually send the money as a prepayment. And if my supplier is not able to deliver this product or this material, I said I don't want it anymore, and we have an agreement that supplier sends money back to me. So it means that 1 week in my bank statement, my accountant can see minus 10,000 euros. Another week she can see plus 10,000 euros. So it means my finances are changing, but accounting statements remains the same. Because making prepayment and getting back prepayment, advance payment is not going to into accounting sheets. So you can spend money, but your accountant will not care. Yeah, and finance is all about planning. So my advice is, if you are a startup, if you're a young company, or if you want to develop idea, try to plan your finances about those fixed costs that has to be paid. There will always be costs that has to be paid, and another one that if you're doing nothing as a variable cost, you don't incur any payments, any losses. So plan your business. Define the cost that you know that you will have to pay every month and go around this. Banks, investors, financial institutions, when they want to give you money, they want big financial plans. And I will not go into details into how to plan your finances, expensive investments, and the reason being is if you are going to some financial institution and you're asking for money, they will provide you all different templates what you have to fill in. They will not tell you, at least in my experience, that I want money. They say, okay, give me your financial planning for the next 5 years. They give you a huge Excel sheet and you have to fill it in. But they love it. And again, in a bit of my experience, and I have friends who are working in foreign financial institutions and in foreign countries, they have to do it because that's a requirement by law, by bank regulations, but those financial plans, they never follow. So it means something they are better, something they are worse, but they have to be filled in. Cash flow. Finances and businesses is all about cash flow. If you are managing your cash flow well and your cash flow is positive, you will always, it's very high chances that everything will be fine. If at some point your cash flow becomes negative, then you're solving problems, you're not focusing on your main activity, you have to refinance, you have to get additional financing, and you get in many troubles that takes time and not always possible to solve. So cash flow is very important. Cash flow does not equal invoice. So when you're making a cash flow statement, I will show you later, don't try that, okay, I'm going to sell, and by selling, I mean I will write an invoice to my customer, and that's already great. Keep in mind that some customers will require payment extension, either 10 days, 30 days, some companies in Lithuania asking for 90 days. So cash flow is about when you're actually getting money. So according to your accountant, in accounting books, your accountant will write the date of an invoice as a sale, and of the date of the invoice of the sale, you will have to pay taxes, or taxes will be calculated based on the invoice date and not when you actually receive money. Again, when planning cash flow, keep in mind that customers will be late. Some customers in some very bad cases will not even pay you, or will pay you in half a year, or will have to go to court, and then only after half a year or 1 year you will get this money. So cash flow is about actually getting money into your bank account, or if you're doing some business that still requires actual cash in hand, so when you actually get your cash in hand. It's not about invoice, it's not about issuing invoice or requesting payments from your customers. So it's cash flow, even though the date is showing today, but I did it in 11, 12 years ago. So this was my actual cash flow at that time. So cash flow has to have a time period. So I was doing every week. So at the beginning of week, I was looking at my bank statement and saying, okay, I have a starting cash position of 11,000. That week, I'm not expecting any sales, but at that week, I'm planning to get VAT refund because my products were exported. So it means when you are exporting, you are issuing your invoice without VAT, and you're getting paid by customer without VAT. But all the materials that you are bought for manufacturing your product, you had to pay including VAT. And according to European laws, if it's exported outside European Union, you can claim your VAT back. But with tax authorities, when you're claiming your VAT, sometimes they make checks, they ask for those invoices to avoid some misunderstanding, and only I was claiming back my VAT every 2 or 3 months. So it means that even though I technically on accounting I had money, but in my bank account I did not have money. And with suppliers you cannot say that, look, I do have money, but it's now parked in tax authorities' accounts. So they will say, okay, transfer it to myself, then you will get parts. So again, planning about cash flow. You have to have time period. You must have the current cash flow number, then prediction of when you're planning to get money, from where, and your expenses. So cash inflow for the week 35 was 23,500. Cash outflow was only 330. And then the coming week, I had no sales, no VAT claiming back, and only in week 39, I had a sale. And then I was planning to make more purchases from my suppliers in 2 weeks more. So what I want to stress that this is, and you should do an actual flow or actual statements of your income and expenses from your bank account, and not by getting invoices or from your suppliers or issuing invoices to your customers. Some invoices from your customers, from your suppliers can be paid later in 30 days, in 2 months. So for example, if I'm paying in week 40 3,500 euros, so maybe I got the invoice from my supplier in 3 weeks before. Plan accordingly. Yeah, financial plan must be regularly updated, and the reason being is that if you see that in 2 months from now you're potentially getting negative cash flow, you have enough time to get more money, to speak with your customers to pay sooner, or to make more sales. If you are stuck and you're not updating your cash flow, and 1 week you are getting a call from tax authority that you are late on payment, and you see your bank account is 0, and you have no way of getting more money in very, very soon, you will get problems. Your account might be frozen, and your business will stop for a day or two, or some activities in your business. So early prediction allows you to take necessary actions to minimize future losses or future even stop of your business. A short story about bad or actually even no cash flow finance planning is my partner, a friend. He's running a truck business, so basically delivering cargo to different countries. He's very good at what he's doing. Like he always on time. He always has the best prices, and he always you can call him at 10 p.m. At night or even on the weekends if you have some problems or you need a truck or everything is fine. But he's not good, and he has no another employee in his company for him to see his own financing. So a couple times of year it happens that he calls me and saying, listen, Andrius, I'm in a bit of problem. I delivered this and this cargo to Spain, and I haven't paid to this driver or to the company I hired the truck from the last invoice because I forgot. And currently, this morning, I paid some taxes and then something else, and I have 200 euros in my account. But in order to unload the cargo and to receive payment, I need 3,000 euros. Can you give me a quick loan? But by quick, I mean I need it in 15 minutes. So yes, I trust this guy, and usually that 3,000 or 5,000 euros are not that much of money. So I sent him. Yeah, now the banking system works that you receive instantly most of the time. He makes a payment to his supplier, and in half an hour or 1 hour, the truck is unloaded and he gets paid. And the next day or even the same day, he gives that money back to me. But that can be avoided if he would plan his cash flow in advance. It's not because he's doing a bad business. He's making money. The money is there. He has a paying customers. His business is profitable, but he just sometimes forgets to issue invoice in time for his customers. And he mentioned that one time he forgot to issue 20,000 euros for half a year, just because he's doing business, not financing. So if you're doing business, it's all about finance. Not only that you are doing great product, you're saving the world, you're curing diseases. If you are not managing your finance, at some point you will get stuck. Shortly about investments. Traditional investments, if you are starting business, means that you are given money by somebody or some institution. With that money, you create something, you earn money, so you make a sale, you have a product, you make a sale, you make a quantity, you know your price, then you give that money back with an interest or some shares of your company, or there are many different methods, and you leave some money for yourself. So it's a profit for your work. This is a very simple, traditional way of doing business. In the last some years, and by last some years, I mean maybe even 20 years now, especially in the last 10 years, when there still is a lot of supply of money generated by central banks and other institutions, that traditional model slightly changed. Again, if you have an idea and you want to start a business, you can get money if you convince the right people, the right institution. Then your idea is not to make money, but mostly increase your customer base, increase your market share at whatever cost. Well, the limit is how much money you attracted from your customers. You hope that profit will come sometime in the future after you reach certain tipping point and break even, and you will get that profit. But what that does, it's increase your valuation, your market share, your customer base, increase your company's valuation. And based on valuation, your first or previous investors can sell their investment share to other investors because your valuation increased. And that circle continues. So it means, again, like if you heard this, the seed capital, first round investment, second round investments, and you can go on for until you go with IPO. It means initial public offering, you release your stocks to the public to buy. It works. You can make money, but it does not generate profit. And already in the last couple of years, there are signs that this model might be backfiring in the financial markets, as it does not make money. In most cases, it does not. Even such huge companies as Twitter, if you calculate how much money they received over the years and how much profit they earned, it's still in the negative area. So it still works. If you have an idea, go for it. Convince investors, they will give you money. You will increase your market share. Maybe you will even make a profit, and then they will sell your share to other investors. That's the way now world works. Yeah, I always get asked, so how to get investments? I'm not an expert in attracting investments, but I've been to quite a few, I know quite a few companies that got investments, or how they started. So my advice, if your idea is something that you can start on your own, so get a job, earn, save money, and start with your basic offering. Of course, if you're planning to, and you know how to make a ladder to the moon, and you think that making a ladder to the moon would increase tourism in the moon, and you will need some billions and billions of investments, then earning and saving might not work. So you'll have to go directly to the investors and ask for that money. But if your idea is practical and something that you can actually make it, just earn and save. Another one is 3Fs, so family, friends, fools. So you can get initial starting money from your family because they trust you. They might not like your idea. They might not buy your idea or your product when it's ready. But yeah, family takes care of family, and your grandmother will always give you some money. Friends, again, friends trust you. They know you, and if they give you money, that's a very good indication that they trust your product as well. Myself, I invested, or I can't say, yeah, I invested. I gave money to friends of mine who were starting business. So one friend, after some years, gave money back to me with some interest, or with return on investment. Another friend said it's already 10 years past. His company went bankrupt, and he's still claiming that at some point in life he will give money back, but so far I haven't gotten anything from him. But at that time I trusted him, his idea, I know the guy, and I was willing to help him, invest in him when nobody even spoke with him at that time. And fools. If you find a fool with a lot of money, it's very likely they can give you an idea at some very early stages. And by fools, I mean not only individuals as a person who does not understand but has money, but also some institutions. Again, if you are going into more institutional houses, so startup funds such as seed capital, they provide you finances at the very beginning. They take a big chunk of your company. And again, if you have nothing great idea and you know how to convince people, you can get money, but you will have to give a lot for it back to the investor. And the reason being because, as you know, investors invest in many different startups, and only a few succeeds. So their return on investment from your share has to be 10 times or even more. And currently there you can get grants and loans. From grants, I mean some public financing, if your idea fits to the profile, and loans from some financial institution. Very hard to get loans if you have nothing, unless you have nothing but you have a great backup. Some land or some real estate or whatever, then you can get a loan. But if you don't believe your idea too much. Never start it. But if you really believe your idea but no one else believes, don't take a loan. It's very likely you will fail and you will have to repay the loan. Yeah, and that's the end of my presentation. Hopefully everybody knows this guy. It's a great entrepreneur, British, Richard Branson. I started reading this book maybe 5 times, never finished it. Great book. I mean, I promised myself to finish it one day, even though the first time I started reading it was 15 years ago or something. But what I like is his attitude that screw it, let's do it. And if you believe in an idea and don't try to overthink, don't, especially at the very beginning, make a huge financial plans. Just do it. And in my case, most of my customers that were profitable were by accident or when I was not planning too much. For example, I was on holiday and I got some inquiry that they need this and this specific product or specific shape of the product. I was on my phone and I said, okay, so I don't really want to make all the calculations, but let's say, okay, if similar product is would cost for me 10,000. Okay, this is a different one, so maybe for me manufacturing will cost additional 1,000 euros. So the actual cost is 11,000 euros. But it's a new client and might be some problems. So I will just say 20,000 euros. And yeah, simple reply to an email without much planning with an attitude that I don't care, I want to be on holiday and I will just still want to reply to the customer. And it's always a good idea to reply to the customer even with some insane price. And sometimes they buy it and they don't care it. And then they even transfer money the next day. Then I arrange everything and everything is fine. So just let's do it, whatever you're doing. So thank you. Was just a brief introduction to the finance world. And if you have any questions, offline or online, try to ask me. And I will try to answer. Yes.
Like the mobile application or web browser?
Every product or service requires investment. Yeah, the question was if it's a digital and good or such as mobile app or mobile services and it does not require finances, how it would work with all the planning, I would say, as investments. So if you're using your own time creating your product, you are using your time. And of course, if it takes 2 hours to create the product and launch it into the market, no real investments as a financial investments. But if it takes 1 year and you are using some office space, or even if you're sitting at home and coding and trying to launch a product, using electricity, heating, you are eating, and it's called alternative cost. So you are incurring cost. You have to provide your coverage of your cost from some other activity, either your family or you have another job. And this is an actual investment. And I suggest, even if you are doing business yourself alone, try to calculate how much it costs you to make it. Because when you go to investors at some point, if you want to expand your business and grow it very fast, they will ask, how much did you invest until now? And you say, no, I invested nothing. I was sitting at home and just coding myself, so I have 0 investments. So it's an indication that you know nothing about finances or know very little. And the investors will not trust you for the future or with their money giving to you. But if you say, I spent a year, I could have gotten a job paid that was paying me for 20 euros an hour or whatever, but instead I spent 2,000 hours on my product that now works. So it means that my investments are actually my time that we can put a value on. Also used my home electricity, that's additional 200 euros and so on. So if you calculate and you provide this cost to the investor, they will take you more seriously, because whatever you do, there's always a cost. Even if you are attending the seminar, you are looking at me, you are breathing, you are incurring cost to the environment because you're releasing CO2. So there's always a cost. It's just how you defined it. There was one more question, Antanas. Any more questions? Yep.
Okay, for example, you are already producing something and people are buying it. You said that don't be cheap and you are selling them decent. And now you see that crisis came and they just decided to cut the expenses and not buying it. What you should do? Should you offer some discount or what way?
Okay, the question is that you have a product or a service and you're selling at certain decent price, and the crisis came. What should you do? Should you offer discounts or should you reduce the price and so on? It really depends on the crisis and how much can you afford to reduce the price. And if you're just reading and hearing that crisis is coming, don't do nothing. Just look if your actual sales starting to drop. Because in my lifetime, there were many so-called crises in newspapers, but no actual reduction in sales, at least in my cases. So if you actually see a drop in price, in inquiries in your customers, first my advice is to speak with your customers. Of course, it depends on the product you're selling. If it's at all possible, to speak with your customers and ask, why are you buying less? Is it because you don't have money, or the price is too expensive? And by expensive price, it means they should have some alternatives, or they don't need this product at all, or they don't have money. So if you maybe have enough money or positive cash flow and you have nothing to do with it, in some cases there are such cases that companies earned a lot and they don't know where to invest, so maybe you can extend your credit line to your customer but keep the same price. So your customer will value you more because you're helping them in a crisis. I know that in some real estate crisis, it happened so that, yes, some buildings were built and companies or suppliers were not able to get money from the real estate developer, but they spoke, they extended the credit, they even bought more raw materials, and they built different type of housing that they could sell faster and repay with those previous invoices. So there's always a case, and I would not go immediately like, there's a crisis, let's drop prices. First of all, never drop prices, but offer discounts, extend credit, and try to keep the same profit for yourself.
Okay, so there's one question from the teams who are participating online. They're producing renewable energy generators, and they are not planning to sell the generators itself, but they're planning to sell the electricity directly. And they're asking how to correctly calculate the cost of electricity.
Okay, I understand that the question is more not about calculating the cost of electricity, but how to calculate the price of electricity to the end user. Because the cost, you should know how to calculate. I mean, you know how much does it cost to run your generator, so it means a variable cost. Whatever generator is, it's not making electricity out of thin air, so it must have some input, either some fuel, traditional or non-traditional, and also service. So it means that every generator once in a while has to be serviced by a person, and person has a cost per hour or a fixed cost per month or whatever. So you must know your own cost very well. So again, when you know the cost, the correct cost, it also has to include depreciation. I did not speak during my presentation about depreciation, but basically when you created a generator, you incurred some investment, and nothing is eternal. So your generator, either after 10 days or after 10 years, will have to be fully replaced. So you have to discount back and include this into your cost or depreciate. So let's say you know that running your generator for 1 hour is 100 euros. Then, as I mentioned, there are two ways to determine the price. Generators, I would imagine, can be either rented per day, per week, per month, and you don't care if your final user is generating electricity or not. Maybe it's just a backup plan to a backup plan. If everything fails, then they will have a generator. But if you want to charge your generator per generated electricity, you must measure it. And you need, I don't know if maybe your generator has some sort of meter for measuring how much output does it provide. And then, yeah, just two ways to determine either value-based pricing or cost-based pricing. If you're happy with having a 20% profit, so add 20% to your cost, and if you calculated 100 euros and 20% is enough for you as a profit or return on investment, you're selling 1 hour of 1 kilowatt of your generated electricity for 120. If it's a value-based pricing, it's a bit more complicated. I would go that I deliver generators to different groups, preferably the ones that don't know each other. And after they test your generator for a week or so, you ask, how much are you willing to pay? They will always say less than they're actually willing to pay. And then multiply this by some amount, 3 times, 5 times, and say, okay, but actual cost is 500. Are you paying this? And they say yes or no. If they say immediately 500 yes, means you are too cheap. So maybe for the next customer, you can increase. But with value-based pricing, and if you are giving different prices to different customers, sometimes it can be that one customer will find out that another customer is paying less and they will not be happy. So you always have to have an explanation why is it like this. Maybe that customer does not require service and they know how to take care of generators themselves. That's why they are paying less, and so on. So many different options, but please calculate your cost, your actual cost, and then based on that, your price has to be higher. Any more questions? So if there is no question, thank you for listening from myself for almost exactly 1 hour. If you remember for your next live at least 10 seconds of any part of my presentation that will help you, that's great. If you remember more, that's impossible, but yeah, sometimes happens. Thank you.